Hello, I'm Hickey from interest.co.nz and welcome to a special report from here at the Reserve Bank in Wellington, where we've just heard the Reserve Bank Governor Alan Bollard and his Deputy Grant Spencer deliver the Financial Stability Report. This comes out every 6 months and it's a chance for the bank to look at how stable our banking system is, what's happening in the rest of the economy and how helpful the banks are being in getting the economy going. What they said is that they are concerned that New Zealand's economy is not rebalancing quickly enough and that there is a risk of New Zealanders building up too much debt to jump into property. They said they would act if they were even more concerned about this. They said acting included looking at monetary policy, so putting up the official cash rate, or moving on what they call prudential liquidity policy. This means forcing the banks to fund a lot of their lending by borrowing locally and for longer terms. Now, the Reserve Bank said it wasn't particularly worried right now, but is watching it very closely to make sure that lending growth, and particularly in housing, doesn't get out of control. Meanwhile, the Reserve Bank also said it was watching what's happening in the finance company sector, that it expected more closures before the end of the deposit guarantees period next year. It also said it was watching what was happening globally with how central banks and governments were exiting from their stimulus, and that there was a risk to the global banking system that if it was done too quickly, there could be more disruption. Also, the Reserve Bank said it was changing its core funding ratio plans for the banks, so they now only had to target 65% core funding by April next year, which is a bit of a delay as well. Now, this is partly a change in the way the Reserve Bank measures this core funding ratio. They say it's about the same as it was before when they were looking at 70%. But we'll see, the banks are pushing back against the core funding ratio. Meanwhile, the Reserve Bank is also looking with the banks at tightening capital requirements for rural lending. What they're actually going to do is make sure that the banks are more consistent in their lending through the cycle, so they don't go overboard when the going's good and then turn off the taps completely when it's not so bad. The Reserve Bank actually said the banks would need less capital for rural lending right now. I'm Hickey. That was a special report on the Financial Stability Report from here at the Reserve Bank in Wellington.